I mean, there's no doubt we're operating in an extremely challenging market, which is perhaps little surprise given the political and economic uncertainty that the whole country's facing at the moment. And any UK consumer-facing business is not immune from that. We were clearly disappointed to see the profit come back in the first half of the year, and especially so because the year started off so well. We had a really good first quarter underpinned by an outstanding result in the key month of March. But from Q2, things got more difficult. As Q2 developed, things got progressively more challenging on two fronts, really. One, the new car market started to decline at a faster rate. And more particularly, we saw a correction in used car values, the likes of which we haven't seen since 2008. And that damaged the margin, particularly in the month of June itself. So a tricky end to the period, having started off so well. Having said that, we had some really strong underlying results within that. We continue to take new car market share. Used car volumes are continuing to grow, and we did the responsible thing by clearing down the stock when the used car values were dropping. And I was particularly pleased with the result in aftersales. We've got a 0 to 3 year old decline in the market, and yet we grew by over 6% on a like-for-like basis. So there were some really strong underlying operational highlights within that. The other great piece of news we had in the first half of the year was that Mark Rabin has joined as a CFO, and I'm delighted to welcome Mark to the company.
Well, I'm pleased to say that the balance sheet is in really good shape. We've got shareholders' funds of virtually 400 million. Now within that, we have about 312 million of freehold and leasehold property. That's about 80 pence a share. So we've got a really good level of asset backing. In fact, approximately 70% of our property portfolio is held on a freehold basis, and that's a key strength of the business. We've also been working hard at reducing our net debt. Our current net debt stands at 74 million. That's a reduction of 13 million since last year end. And that's been achieved by driving tight control of our inventory, which we drove down by 37 million since last year end. We have a good revolving credit facility of 250 million, which stands us in good stead. And all of that gives us real confidence in the future of the business and allows us to announce a dividend, which we are maintaining versus last year at 1.48 pence.
The whole sector is regulated by the Financial Conduct Authority because as part of selling cars, we also sell finance and insurance products. And we, for many years, had an ongoing dialogue with the FCA. At the end of June, we announced that the FCA intend to carry out an investigation into our regulated activities. Now, what I can say is that investigation has not even started yet. So it's therefore far too early to speculate on what the outcome may be. What I can say is that we do take it very seriously, and we're going to cooperate completely and fully with them. Separately to that, at the end of last year, we commissioned a study through independent consultants to assess our compliance and regulatory framework, because we can see that the FCA are going to hold this sector to a new standard, and we fully support that. And the areas they're looking at are our governance and oversight arrangements, how we assess risk, how we quality assure risk on one hand, and then a big piece of work looking at our sales process. And the intention here is to make the sales process easier and simpler for our salespeople to administer, therefore making it a better experience for our customers, which can only be a good thing. So it's a big investment, we're fully committed to it, and it'll give us a platform to grow the business in the future.
Well, automotive retail is in a really exciting place at the moment. It's a time of change. We have electrification, autonomous vehicles coming through, and a whole raft of new technologies. And it's clear to me that Lookers is really uniquely positioned to capitalise on these opportunities. We've got the right brands in the right locations, critical for any retailer. We've got great OEM relationships with our brand partners. Again, that's key in any franchise business. We've got a strong balance sheet, and I'm looking forward to getting stuck into that. And we've got strengthening infrastructure, which is our base to grow from. But most importantly, the key dimension of any business is people. Lookers has got a great people culture and a great team-based culture. So absolutely no doubt in my mind that Lookers is the place for me and a good place to be in UK automotive retail. Well, I've got three key objectives. Firstly, and most importantly, I want to make sure that we strengthen our compliance and governance framework. That's critical. We know we've got work to do in that area, but it's key that we do the right things and we do them well, and that compliance is embedded to the rhythm of our business. Secondly, I'd like to focus on driving cash. I'm a real believer that cash is king. And that's really important during more challenging trading conditions. We've got trapped pockets of cash in our balance sheet, in stock and debtors, and I'd like to optimise our position in that particular regard. And lastly, and very importantly, cost control. Very important when revenue and gross profit is more restrictive in a tougher market, and I'd like to make sure that for 2020 in particular, we plan our business very tightly with regard to cost control. Great news for me is I have a great finance team underpinning me in these objectives.
Yeah, we expect the second half of the year to continue to have political and economic uncertainty as we did in the first half. Much will depend on what type of Brexit we have, and that will go either way. No matter which way it goes, our responsibility as a management team is to outperform the market as we have done in the past. And that's about focusing on operational excellence and working hand in glove with our brand partners. Alongside that, we're absolutely committed to delivering the improvements to the business that I've mentioned around our regulated activities. Thinking further ahead, I'm totally convinced that the business model is right for us. Having the right brands in the right locations, underpinned by operational excellence, gives me great confidence in the future for this business.